Hey there, my name is Steve. In today's video, we're going to look at basic market structure to see if we can actually make money trading this way for Forex. So let's have a look at the chart and I will explain in more detail. Okay, for this example, we're just going to use the euro dollar, and this is a 1 hour chart, but the basic concept works on any time frame. You can also use this for scalping if you like as well. So first thing we want to do is pick out our top and bottom sections of a range, and I usually draw them in with a line. So here are the highs and lows that we're going to start with. I'm just using a red and green line for these. So now what we want to look for is a breakout in one of the directions and then look for an entry for a trade. And we will then also, after we make a trade, we will move the actual lines down or up accordingly based on the market. So start off with, we've got a range here that we're trading in, and then we can see here that we've got a breakout of the range. So what we're looking at here, when we have a breakout of the range, is we're going to enter on, in this case, it's a short trade because we broke out to the downside. So we're going to look for the first pullback and then enter for a short. Okay, now in this particular case, after we broke down the range, the pullback is right here in this area. And let me just turn on the pen, might help. Okay, so we can see here we've got a breakout of the lower level, so a breakout short. So now we want to look at the first pullback and then enter in the same direction. So this will be, there's 3 green candles, and then the first red candle after the pullback is here. So this is actually our entry point. Stop loss goes above the previous high area. So if we just use our crosshairs, we can see that that is around 24 pips, 25 pips. I usually say about 5 pips above. In this case, just to give it a little bit of space in case it does happen to come back to that area and retest. So we'll say in this particular case, we've got a 30 pip stop loss and a 1.5 take profit. So 30, that will make it a 45% take profit. So entry is here. And as long as it doesn't go above the red line, we're still in the trade. And we've actually hit our 45 pips here. So it actually took 2 days. And it actually went as far as 55 pips on this particular run. So in this particular case, we will close the trade here. And now we will actually, before we enter the new trade, we will reset our lines. So the previous swing high, let's set the low first. So the low is here. So we're looking at our next trade. And our previous high before that was at this level. So we're looking at where we exit the trade, which was around here. So we're looking at our previous swing high and swing low that we want to break. So now we're looking at trading on the next day. We can see here that we stayed inside the range again after this particular day, and we can see here we've had a break below the lower level again. So we're looking for a short, based on the next pullback. The next pullback occurs right here. So the stop loss in this particular case would be, let's see, that is, let's see, 42, 45, around 46 pips would be the stop loss. And that would make around 79 pips would be the take profit. So entering the trade, we've got so here we actually got to a low point and it was 75 pips. We said that our profit target was 79 pips, so we actually didn't hit the target yet. We're still in the trade. We did actually have another pullback, which given us another entry point if we missed that first one, but it still continued in our direction and we did reach 79 pips at this level here. So that is 2 winning trades. So we've risked 1% on each one to make, so we've risked a total of 2% so far and we've made 3% profit. And now we move the lines down again. So this was our previous low. And here is the high. Yep, just double checking we've got them in the right place. So this is our new range. And this is where we exited before. So we're looking at now the next break of the low or the high. So we've got a break of the low here. And we're looking for the first pullback to actually enter our trade. This one is questionable because it actually pulled back right to the bottom line. So if that's the case and we entered here, we would have a very large stop loss, about 95 or 96 pips. If we didn't enter at this point and we waited for a pullback into the range first, which was preferable, then this is where we would actually enter. So this one's actually not any better. We've got let's say a 90 pip stop loss, which would be 135 take profit. In this particular case, we had a loss, so we didn't actually quite make it, mostly due to the large stop loss on that one. So it made our take profit higher as well. The other alternative is if we had have entered and just put the swing above the high by 5 pips. So like a 20 pip stop loss at that point, we would have made it easily, but if we used the high for the stop loss, then we didn't make it. So this particular case, we went into profit by about 70 odd pips and then it retraced and came back to actually take out our upper level. So in this case, we would have got stopped out at this point. So now looking at how this would work out again for the next trade. We have a new upper range and a new lower range. Now we're going to look for a breakout of one of these for a new trade, and we can see here we had a breakout to the long side. The first pullback was only one red candle, so in this particular case we would enter after the green candle. This one is a long stop loss, so we have an option here of, because we're outside of the range when we're entering the trade, we'll put our stop loss below the upper line instead of below the lower line. We'll go one candle below, in that case it is 60 pips, which makes our profit target of 90 pips. and we can see here that this run actually went for about 250 odd pips, so an easy run. So that shows you a bit of an idea how the actual market structure works and how to trade using this method. Leave a comment below. Have you tried anything like this before? It's kind of like a support and resistance style of trading, which is basically trading the higher highs and the lower lows. Hit the like and subscribe button to support my channel, and watch out for my next video.